Hello and welcome back. Yes, I can't believe I'm actually back after I think 70 days since the last video I've actually made. It's quite crazy to actually think that it's been that long since the last video has been out, but we are back and we are diving into three stocks which I believe are a buy, and especially three dividend stocks in my opinion. Now, we are going to dive straight in. We are not going to be messing about. We've got time to make up here and we are going to dive into this first pick, which is Clarkson's PLC. So it's a London stock. Now, with Clarkson's, you might not hear about it often, but this company is the backbone of global shipping. They're the world's leading shipbroker, connecting cargo owners with vessels, and they also provide logistics and maritime intelligence, which is quite, I feel, a quite good thing for this stock and give it a little bit more leverage over the other ones in the sector. So, starting off with its current share price, it's at £36.40 or 3,640 GBX, depending on how you guys like to view that. It is in the industrial sector with a market cap of 1.1 billion. Now, it was launched in 1986 with a dividend yield now at just over 3%, which is nice. It's got a dividend growth between 5 and 6.4%, which is quite good indeed, and it's been growing for the last 9 years. Now, why do I think this is a pick? Now, it thrives when global trade is booming, and even in the downturns that we're seeing, the data that they're showing and in the balance sheets, the advisory services keep the revenue flowing, which is good. So it doesn't always have to thrive on the global trade. Now, their EBITDA margin is strong and they are consistently growing profits. Now, also a good sign is insiders are buying shares, which is always a good sign, but I know some people don't like viewing that. So, Clarkson is a quiet compounder. It's not flashy, but it's reliable. And if you want exposure to infrastructure and especially global logistics, and it's not really just a shipping stock, I think this could be a smart long-term hold, especially even though it's down minus nearly 8%. It's worth getting more shares. Now, everyone is going to love this one, and I think so do I, because I use this company every day, and I'm still thinking of adding it to my portfolio. That's right, it's Domino's Pizza, and you probably know the brand, and you might not know how great this company is because it's not just a pizza company. They're actually a tech savvy company. Now, over 75% of orders come through digital channels, and their franchise model is designed to be incredibly efficient with that because Domino's Pizza needs to keep up with the trending theme of 2025 going into 2026. So, what is Domino's Pizza going to offer then? So as we can see, the share price is between 406.79 to 406.97 at times of recording this. Now, it is in the restaurant sector, so it's a consumer discretionary. Struggle saying that word. With a market cap of 14.3 billion. Now, the IPO was in 2004, and the dividend is at 1.69, with a dividend growth streak of 11 years, with an 18.5 CAGR dividend growth. Now, that means why is it on here? Well, in my eyes, Domino's is growing steadily with same store sales up 5.2% year over year. They're buying back shares, which boost shareholder value. And of course, my idol, Berkshire Hathaway, has increased its stake, which is a big vote of confidence, in my opinion, because if they're adding shares into this company, then there must be one thing, and that is the great stock that it is. Now, Domino's is a growth stock, but it's got a dividend kicker with it. So people who want to get the exposure in the consumer trends with growth in dividend, this is a stock for you. Right. And lastly, we're going to follow the Berkshire Hathaway trend, and I think you know where this is going to go. It is right. It is Coca-Cola. Now, as me as a football fan, I love to see Rio Ferdinand and Alex Scott on there, but we're not worried about the football. We are worried about why this stock needs to be in our portfolios. Now, current share price is 68.39 to $36, which is quite nice indeed. Now, the market cap is at 295 billion, and of course, it's a consumer staples in sector because it's a beverage company. Now, this IPO was relaunched in 1919. At the minute, it's got a dividend yield of 3% with a dividend growth of 62 years. No wonder Warren Buffett loves this stock with a 3.5% CAGR dividend growth. Now, to me, this is a dividend king. It's Buffett's favorite, and it's a global beverage titan. It beats Pepsi in my eyes by a long shot. Now, it sells over 2 billion sevens a day, and they have $30 billion brands from Coke to Minute Maid to Smart Water. They are still growing, and their business is a recession resistant, and it's also globally diversified. Now, Warren Buffett brought Coca-Cola in 1988 after the market crash. Now, I wish I was born in that point because I would be a millionaire by today. He invested 1.3 billion, and that stake has paid out billions of dividends and remains one of Berkshire Hathaway's core holdings. He calls it forever stock, and it's easy to see why, and no wonder he's not going to let it go anytime soon. Now, this is an ultimate income stock. It's not going to double overnight, but it will pay you. So if you don't want the growth in terms of it, but you want dividends, this is for you. And the proven track record probably says it for itself. It will pay you year on year, no matter what, and it will grow and grow ever so slowly, but it does its job as a dividend stock. So I hope you guys did enjoy my 3 little picks. Hopefully we're going to get back on track. We're going to get some videos down, and we're going to get these videos out, and I'm so glad that you're going to still be watching. And if you found this helpful, drop a like, subscribe, let me know which stock you're most excited about. And I'm so glad to be back, and I hope you guys did enjoy. And once again, I will see you next time. Goodbye.